Well, I think we can start. Hi, everybody. Warm welcome from my side also to the London Summit. This year, I'm Darmani from Mackenzie, and I will be your moderator for this session. We're gonna talk about where are the hottest European market, where you should put your money. For those of you who don't know about Mackenzie, we are a research consultancy and data analytics company, providing our clients with the latest information and data on the market, helping them to make the right strategic decision and development plan. And I've been working on the European energy storage market for the past 10 years, I should say, and I've seen it to go through tremendous changes, but there is still way to go. Basically, based on our forecast, we are seeing the eightfold growth of the market over the next 10 years. We are seeing the total capacity to pass 500 gigawatt hour very soon, not very soon, over the next 10 years in the term of total capacity along all the segment. If you ask me where we are today, our data shows that by end of 2024, we were roughly at 65 gigawatt hours. So you see growth potential is huge. And a lot of this growth will be driven by the grid scale segment. And I remember I was on a panel of a similar topic a couple of years ago, and it was actually very hard to find experts who have experience in market rather than UK, because a lot of growth at the timing was happening in the UK and a lot of investment was in this market, versus now I'm sure the organizer was a lot easier for them to put me here on this panel with 5 distinguished panelists to talk to you about what's going to happen next in Europe and where we should invest or look for. I will give our panelists a chance to introduce themselves as we speak, but I want to quickly introduce them here as well. So I have with me Lucy Plant. She's from the Fluence, Sales Director. Juan Ceballos, Head of Sales at Trina Solar. Caroline Wright, General Manager at Wärtsilä. Markus Ovaskainen, Sales Director at Merus Power. And finally, Max Stirling, Director at JLL. Yeah, with this, I want to start the session. So my first question is that, from the panelists, what do you think make a market a hot market in Europe? What does it make it, what factor is needed to make a market attractive for investment? And maybe Lucy, we'll start with you.
Yeah, no problem at all. So thank you, Anna. So as Anna said, my name is Lucy Plant. I'm Director of Sales for UK and Ireland at Fluence. Fluence have over 15 years experience innovating in the energy storage industry. We've deployed over 34 gigawatt hours of energy storage projects in 48 markets globally, including the first lithium-ion battery that we installed in 2008. We're actually seeing many of the features and safety measures that Fluence have introduced becoming industry standard now, like our full-scale burn tests. And we hope that we're going to see that again with our newest product that we're launching here at SmartStack. It's our modularized AC block, and we hope that that will revolutionize the industry again. So what makes a market attractive? I think it's probably easiest to do this, as I said, I'm over UK and Ireland, so those two markets can actually be a great comparison of perhaps what's making the Irish market versus the UK a little bit less attractive right now. So I think when you're analyzing the market potential, obviously you want to understand, it goes beyond merely understanding prices, traded volumes in the market. You also want to understand other key enabling factors, so geography, technology, politics and regulation is the key one, and that's the one I think is key for UK and Ireland. So Ireland was one of the leading storage markets in Europe with the DS3 Ancillary Services Programme, which was introduced in 2016, instrumental really in the integration of about 40% renewables onto that grid by 2020. A really nice thing with that program was the link back to SNSP, so System Non-Synchronous Penetration. So when the batteries could deliver the most value, they got paid the most money. And that led to over 1 gigawatt of energy storage being installed in the Irish market. However, today there's real uncertainty in that market as the market moves away from the traditional regulated biannual DS3 auctions to the day-ahead system services market, so competitive arrangements. And what we're expecting is that DS3 market, the regulated arrangements, is going to end on the 30th of April 2026. And that new DASA, so the competitive arrangements, won't start until December 2026. So there's an 8-month gap between those two programs. Airgrid came out last week and they actually called it the gap. So it just reminds me of getting on the tube with a, mind the gap, please. And that is causing that uncertainty in that market, together with delayed access to the wholesale markets with the scheduling and dispatch program. LDES consistently delayed again. We saw that in December last year. So despite the fact you've got really good revenues in that market, so the DS3 right now, we're seeing in excess of €100,000 per megawatt per year, actually more likely in the 120 to 180 range. But it's been over a year since a new battery energy storage project was transacted in that market. Now compare that and contrast it to the UK market, which has experienced really lows in revenues, lower term forecasts, but projects are regularly transacting. And that's because of the ability to actually stack revenue within that market. So you've got a strong suite of services, so things like wholesale markets, capacity markets here, giving surety to revenue, and then the dynamic and reserve services, and then those stability programs. And then you see, as we heard this morning, some of the newer projects coming. So the grid reform here to give certainty on new connections, and then the LDES program. Again, lithium-ion was explicitly excluded in the past. We feel it may be more implicitly excluded now with some of the new technology requirements, but it's still making that an attractive market for people to look at and invest.
Yeah, thank you. Maybe we go to Juan also. You want to make a comment on that and introduce yourself also?
Absolutely, absolutely. So thanks for hosting me. Very glad to be here. I'm Juan. I'm leading the sales team within Trina Storage, so part of the Trina Solar group. And from a Trina perspective, from a battery supply perspective, where is the hottest market? Well, where the volume is, I guess, for a battery supplier, of course. So what we see from the market, UK has been, the baseline, and we've been focusing a lot on UK and has been driven the storage market for the last 5 years, I would say. Germany is hitting very, very hard now. There is no capacity market, there is no subsidies, but it still is making a lot of business sense, I would say. Everyone is waiting for Italy. The Max is the holy grail for all of us, and everyone is waiting for that. If the Italians don't delay anymore, I hope by June, September we'll have something. And then Spain, right? I think those are the key focus or priorities for us at the moment. Spain is also being pushed through subsidies, giving a little push, but it has a lot of the fundamentals to make this market very big potential.
Yeah, thanks. Caroline, to you. So Lucy called a stacking revenue having an open market for storage technologies as a parameter that make a market attractive. One is mentioning volumes, actually, that we have to look at, and then what is your view? I mean,
yeah, hi, just to introduce myself. So Caroline Wright, Wärtsilä, been with the business since about January 2020, been in battery storage for probably eight plus years. Yeah, I think in terms of market forecast and what's driving the market, I think one question is, you mentioned forecast. I think that's sort of the tip of the iceberg. Where's that volume? But then underneath that, what's driving that volume? Is it policy? Is it the revenue stack? Is it ease of getting grid connections and permitting? And I think in terms of market growth and depth, there's the point of what the strategy is when you're looking at a market. Are you looking for one-off projects or a portfolio of projects for the long duration? And I think at Wärtsilä, I'm in the strategic market development team, and our approach is that we don't go into every market, but we understand and evaluate what those drivers are, and it's a plethora of questions that you need to then drill into to understand where's that volume going to go. Is it going to be there for the long term? What's, again, back to that, what's driving it? Legislation, revenue stack, all of those fundamentals. And then you can then start to pin in what the product and the offering that you're looking to provide for the customers. And that, I think our view is very much putting those pieces together to understand the market and then to go in that we can deliver and be there for the full life cycle of these projects. Because as we all know, these projects, Maxi, for example, the tender, those projects can be 15 years plus. We're there to partner with the customers and the assets for the long term. So,
yeah, great. So on the previous point, we are now basically looking at market fundamentals, right? So it's like that you need basically the fundamentals in terms of regulations, policy, and other factor to be right in order to see the volume actually in the market, right? And that's where normally what makes the market basically hot. And Markus, if you mind introducing yourself and making what you agree, you have something to add to that?
Sure. Good morning, everybody. I'm Markus Ovaskainen, Sales Director at Merus Power. I've been working for energy storage industry about 8 years in different roles in R&D, commissioning our first pioneering energy storage projects in Finland, and later somehow got into sales and sales leadership. I have the pleasure of working to Merus Power, who is now the market leader in the Finnish energy storage market, and all good points so far. I think these market fundamentals and market depth comes from a technical need in the market, where I would start looking for new markets attractiveness. So what is the energy production mix, forecasted demand, what kind of import-export connections to other electrical markets they have. These will provide fundamentals to there being a technical need for energy storage systems in the first place. And then another thing to follow is how quickly can policymakers translate that technical need into concrete market design and market mechanisms that then bring the profitability to the market. Something that I want to bring in, these revenue streams, their existence, profitability for energy storage are given when you are looking at a new market. How available the data is from historical prices, important part of it. How much data does TSO offer, so you can look into what has been the profitability in the history. But something that I want to emphasize that I did not hear yet is, I think a good market, an attractive market is one where you can get something done, not only the market size or these fundamentals. If you look at an empty site with some trees and rocks in a specific country, and you can visualize the route to the market from that, bringing the hardware in, getting all the simulation studies required by the TSO done, having a grid connection agreement in place, and finally a market operator that provides a route to the market, that matters, because you can look at the potential market size very long time and then get lost in the details of how do I actually get anything done in here.
Yeah, perfect, thanks. And I think Max probably also has something to do to say on that, right? Because you have been in the advising position. If you don't mind, introduce yourself, Anne.
Yeah, can do. Max Sterling, so in JLO's Energy and Infrastructure Advisory Team. So I head up energy storage M&A. We've advised on over 50 transactions within energy storage across Europe, across a very unlucky 13 European countries, hopefully 14 soon. I think, the key things for market attractiveness for us is, the revenue opportunity, not just today, but also long term. I think looking for markets where there's a real arbitrage case rather than just a short-term rush in ancillary services revenue. And probably most tied to that is depth and longevity. And that ties to what Markus is saying there, that actually there is a fundamental need for storage rather than just an elevated energy price that's creating artificial spreads today. And so that depth is kind of one of the key things. And why is that so important? That comes back to market saturation. We had some talks about, the UK and what's happened in the UK over the last couple of years. I saw it pop up on one of the questions on the screen, is the UK still a core market? That was driven by, a collapsing gas price and saturation of ancillary services. But, long term, the fundamentals are still there. There is a huge deployment of on and offshore wind and solar across the UK that will change that opportunity, creating more spreads. We're seeing that start to come through in trading revenue. And that market saturation point is going to be key. I think we're talking about it in our prep call around saturation, the hottest market. I think for us at the moment, the hottest market most will say is Germany. And it's really attractive. There's a real opportunity both in day ahead and intraday in terms of trading. I think we're looking at, average spreads from day ahead of, well in excess of 100k a megawatt for just one cycle, in some days going over 200. But equally at the same time, you've got a 200 gigawatt plus pipeline of projects. That creates a real issue there around market saturation, something that has been profound in the UK. We've seen a lot of changes in the UK around grid reform. CP30 is a really interesting thing, but it's going to cull, 70-80% of that pipeline. That was caused by very low barriers of entry. And Markus, you're talking about the easy projects, countries to build in, but sometimes those are the ones with the largest risk. If you're at the DSO level in Germany, there isn't that much of a burden to enter into development. There is a very low barrier of entry, and that's why they're inundated by these grid applications, grid application being the key ones rather than the grid offers. You know, it's not far-fetched to see Germany bringing in similar reforms that we have in the UK. I think one of the most obvious ones is, you know, the CraftNav that's applied at a number of the TSO levels, something similar coming at the DSO level just to create a barrier for entry, to kind of slow down the wave of projects coming through, because, you know, markets can be attractive today, but that saturation is real where there is a low barrier for entry.
Yeah. So in listening to you guys, I think there are a couple of points that come back to back. So regulation, market fundamentals, and I would say project bankability, or the, like on high level speaking, is what makes a market a hot market for energy storage, but they are also somehow interlinked, right? But I want to pick up on the regulation side. So on the regulation side, I wonder if you guys can think of kind of a regulatory changes that can signal in a market that this is a good market and there is safe to invest in energy storage and it needs energy storage. So we see now, for example, in Europe, more and more European governments are setting a target for energy storage. That's good. That's a good step because they're recognizing the role of a storage, but it's not enough if you don't let the asset participate in the market or do what they should do. And Juan, I come to you because you called out some of the market with the policy. You called out Max in Italy, in Spain, the regulatory changes. You talked about volumes that are also linked to regulations. So I wonder if you can tell me, like, what do you think? What kind of a regulation we would need in the market in order to make the energy storage succeed?
No, definitely. I think it starts with what you were saying in terms of objectives per country and what the targets are for the next 5-10 years. And they start to build from there. I think in terms of regulatory aspects, I think probably mentioned two aspects. Many countries have been addressing those through capacity market auctions. So that's, we all know Italy, in Poland, Belgium, France, all those markets are capacity market, which case gives you the base revenues on top of which build your business model. So that's one way to do it. Spain is also targeting that capacity market. Let's see when it comes. They are maybe running behind, but it will come. And that's a regulation aspect that is incentivizing storage markets, bringing base revenues, not merchant. Investors do love that and makes a business case. In other markets, there have been, call it regulation, call it subsidies, try to push storage a bit, I would say. So that's the case of Greece, the 3 auctions that have been there. Now the same goes to Bulgaria, Romania. The PERTE project in Spain is also subsidy-based. For me, that's only more a one-off that is trying to bring the storage into the market, but it lacks the capacity market perspective given views of 10, 15, 70 years as it is in Poland. So maybe those are the two regulations that is bringing the business case in all the different European countries that we have seen so far.
Okay. I think, Markus, now I come to you because you also called out, like, what is the hot market and where actually you can get it done, right? I really like that. And maybe you can tell me, like, is it related to regulation? Can you foresee a regulation that actually makes it easier to get it done, a project in the market?
I believe so when it's clear what are, for example, the technical requirements, grid connection, pricing, timeline to get that kind of agreement done, and all other data available that both the suppliers and the investors need to visualize this. Finally, the route to market through the hardware connection to the local TSO's portal of submitting bids, for example. If this is unclear or if it's distributed in many different ways to doing it in different price areas in the same market or governed by DSOs instead of one TSO that sets the same rules for everybody, it gets more difficult to predict that if I want to get something done, when will it actually happen? And I, as a very short sales pitch, also choosing the right partners, because you can buy all of this hardware separately and get it on the site, and then hope that you somehow get a connection to the grid. In Finland, for example, there's now about 100 megawatt hours of energy storage projects that have been delivered a while ago, where there's nice inverters, batteries and transformers, but they do not have the permit to connect to the network because nobody was there carrying out the required documentation, simulation studies and site tests for these energy storages. So Merus Power can provide that all under one contract in a predictable environment so that everybody knows that it's going to happen.
Okay, great. And Max, I also want to ask you, so you've been involved in like a lot of advisory projects for Germany. We heard around 230 gigawatt are seeking now grid connection. Do you think is there something government can do to bring these online, or is it like going to be all like 230 gigawatt?
I think that's a very misleading stat. It's very tabloidy talking about the 200 plus gigawatts because that's grid applications, that's not grid connections.
Yep.
I think that's very different when we talk about the issues that happened in the UK. There was actually multiple 100 gigawatts of people which secured grid connections. In Germany, there was a lot of grid applications. I think what we're seeing at the moment is the DSOs and even the TSOs in certain regions becoming overwhelmed with the volume of applications. You know, they weren't used to processing this number of applicants in any kind of given calendar month. And so we're really seeing that slow down. So it's maybe a big warning sign. I don't think it's critical. I think when we talk about regulation in Germany, again, I can see it on the screen here. You know, there's two key things that happened recently and are going to happen. You know, one of them was the removal of the grid fee exemption, you know, out to 2029. That unlocked one barrier to entry, which has really stemmed this development we're seeing. And I think the next one that's coming in is it's the BKZ, you know, this construction cost subsidy that has to kind of be paid is quite punitive. You know, for those that don't know, it's something that you have to pay when you go into construction, and it varies on whatever region you're in. And it can range, we've seen anything from 25,000 euros a megawatt all the way up to 140,000 euros a megawatt. We did some analysis and there was projects that were 40 miles from each other and there was an over 80k a megawatt swing within this cost. That doesn't send the right locational signal for where storage is needed on the grid. You know, storage is needed where there is constraints on the system, you know, whether that is managing, you know, the wind constraint in the north or the demand constraint near the cities. This BKZ is a little bit more random. And, you know, there is reform coming, looking at doing that. You know, there's legal challenges at the moment about whether it should be applied or not. I think it says right here, you know, what's the view on it being removed for new BESS? I think it's an important thing. I think it just needs to align with actually, you know, the mapping for where storage is needed in that country, because at the moment it doesn't send the right signal. So yeah.
Yeah. So to summarize, I mean, we wanted to look at what kind of a policy we need. So basically what we need, like capacity market, good incentives, and actually we have seen that. So every market that have a capacity market and enable battery participation, we saw the market actually energy storage to take off because it brings this contracted revenue base for the battery to get financing. There is new subsidies coming, and that's not limited to key European markets. So it's like, we also see it in Poland, we also see it in the different markets. So there's a lot happening there, and then there is the grid requirement. And things related to how fast you can get grid connection, how high is the fee, how easy is the process, and etc. Now I want to look also at the project bankability and fundamental. And Lucy, I come to you because you talked about it, that the bankability is different. For example, UK and Ireland, they were sitting next to each other, and then one had a regulation that there are question marks about it, and the other one make it a bit easier for battery to participate in the market. But we saw also the revenue is actually crashing in the UK because of market saturation. But at the same time, I think in UK there is the privilege that bankers or financing institutions, they are familiar with this kind of project. That's very different with Eastern European market when we hear, even if you show the merchant revenue looks good, a lot of banks, they don't understand them yet, so they need a lot of insight into what does this mean. So I wonder what is your view? So how easy is get to financing, you think, for a project with merchant revenue, or when you are not sure about the final IRR number, and how do you think this change in the future?
I mean, as you mentioned that, I think it's investor confidence. You know, the UK is a proven market, whereas we've seen some of the other markets, you know, Poland, again, it has the capacity market there, but we're seeing derating of batteries change possibly after award for those capacity market positions, you know, some of the higher emission systems coming in. But ultimately, we're seeing a real fundamental need, and that's not going to go away in this UK market, particularly with some of the curtailment that we see. The grid reform now is giving investors the confidence. There's a clear plan on how you can get a grid connection now in the UK with this reform. And then, as we measure that visibility, we're an island nation, we've got little interconnection, and the electrical grid that we have really cannot support the amount of renewables that we're generating. So we were talking about it at the back earlier, but it was just before Christmas last year, so December the 18th, on LinkedIn. It was one of those, the slow days before Christmas, things are slowing down. And there was a gentleman called Rob Hawkes from Octopus Energy, it was December the 18th. And he posted about the costs of curtailed wind in Scotland. So actually on that day, 8:30 in the morning, he said, wasted wind had cost Britain well over £6 million just by 8:30 a.m. And that was just because of the wind farms in Scotland were effectively shut off. The total cost for that one day alone was £12.6 million. 4.1 million of that was from switching off the turbines. And 8.4 was actually caused by buying energy from elsewhere, so importing it. So we're not able to use the energy that we have on the grid in the UK right now. Battery energy storage can resolve that, so it's really brought attention to that need within the market. I think Field Energy then followed up with comments about how 80% of those costs could be slashed if sufficient BESS were deployed at that B6 boundary, so that's that pinch point between Scotland and England. And that's where most of those curtailment costs are sitting. And there's a clear driver and a need. So that one day, obviously we talked about 12 million there, but as you continue to develop more offshore wind in Scotland, the cost of inaction, of not resolving that pinch point, will be 2.2 billion by 2030. So whether we have the solution now, or it's something that is coming, we know there is that market need there in order to build those battery projects. Therefore, there will be bankability, and you can have that investor confidence in that market.
Yeah, that's perfect. So, and to follow up on that, I come to you, Caroline. You said that the market, you're interested in market with volumes and where you see the depth in the market. And then one of the market that actually came up often here was Germany. So I want to get your view on that. So Germany is a market. One of the questions says like here also if the capacity market in Germany is a must. So in a market that is new, there are some already installation in Germany, but it's also more or less new. Everybody now all eyes on it. How easy and bankable are project? What's your view on, is it going to saturate here like UK or not? And what do you see in like a hot market like Germany that everybody now focus on it?
Yeah, sure. No, great question. I think in terms of Germany, it's got very volatile wholesale market. And I think in terms of the overall revenue start for battery, we've all seen the market saturate from the beginning in the UK. It's been coming and going a lot. So I think if with the level of renewables that they're looking to deploy, I think 80% renewables by 2030, backed by the energy storage battery strategy, you haven't got the certainty of necessarily bankable, contractable revenue streams, but you've got depth of market there that can at least get those projects on the ground, provide the key driver to enter the market. So investors looking at that, getting into a market early, you get the advantage of the cream of those early revenue streams. So I think Germany holds that weight. In terms of capacity market, I think we've discussed markets across like Belgium, Poland, and the capacity markets. If you look at the derating factors on those markets, I think in Belgium, the recent ones at a rating of 4 hours was around about 57%, and at 2, about 38%. So you're allowing batteries to compete with other technologies. So it's proving itself on those contracted revenues, and then from that you can then build the revenue stack up. So I think with Germany and looking at any market, it's down to the investor's appetite for risk. Do they want bankable contracted revenues? So like Maxi offers that, it's a fantastic, pardon the pun, plug and go, guaranteed revenue, no risk. Or do you go into markets where the risk factors are higher but the rewards are higher? And I think, just back to my other point, it's also understanding what technology, what software, how are you going to optimize to ride those peaks and troughs in the market. I think, you know, the UK, great example, we've all learned a lot from that, continuously learning. How do you adapt and evolve with those strategies to future-proof it? You know, we've got revenues today, those revenues could change tomorrow. There's, you know, in the UK we're seeing inertia becoming more prevalent. To your point, Lucy, you know, with the amount of wind up in Scotland, I live in Scotland, so I know how windy it is. Yeah, so it's down to the risk-reward appetite and then choosing the right technology to wrap around that for the long term.
Yeah. So to summarize, we basically took for a market, I try to get the keywords here, what makes a market high, is revenue opportunities, a stacking revenue, which is linked to profitability, is depth of a market. So Germany, for example, has a different size to some of its neighbor markets. The fundamentals should be right. How is the renewable share? What's going to happen there? Is it an island like UK, or is it has a very high interconnection? But fundamentals should be right. And the project profitability, and how likely is we see new markets such as inertia emerging there. And we are nearly at the end. So we have these points, and we talked about some of the market, but I want each of you to go maybe for about a minute and tell me where do you think will be the hottest market in short to mid-term. So let's not look very long ahead, because nobody knows what's going to happen next, honestly. But let's say to short to mid-term, where do you think going to be the hottest European market in Europe? And Lucy, I start with you. You're the first one.
Yeah, no problem at all. I mean, we do see Italy, with the Maxi scheme obviously being somewhere that is going to be hot. They have obviously 50 gigawatt hours of procurement that they're going to make there. The issue we're seeing is this 8-hour requirement, and it's really driving down the price there. So it's difficult to compete in that market, and you're seeing more lower technology, second-rate technologies coming in, which with it is going to bring risk to the developers, and obviously risk to our industry as well. So if there's a fire incident there, that could be a problem. Cybersecurity as well as another piece that we see potentially could be a problem in markets like that, where CapEx alone is what's driving those markets forward. And then Poland as well, we touched on the capacity market. So for us, we think Italy, Poland, and then obviously Germany will be key markets.
Very quickly on my end, I think 2024 was, 10 gigawatt hours of batteries were deployed, plus or minus on the utility scale. I think 2025 will be about 15 gigawatt hours. 2/3 of that volume will come from 5 countries, to be very clear: UK, Germany, Italy, Spain, because of the purchase subsidies, and Poland. And by 2026, if you add Netherlands as well, I think you'll cover 2/3 of the volume market. So that's where our focus is. And then from there, as you were saying, let's see where it comes. Even Maxi and these kind of tenders are tenders that are going to happen now, but the projects will only be commissioned by 2027 earliest. And all capacity markets, we need to know the capacity market auctions are ongoing, but typically those are for projects that will be commissioned in 2-3 years' time. So this is a more medium-term view. But again, for us, top 5 countries, I would say Italy, UK, Germany, Spain, and Poland probably.
Carla.
Yeah, thanks for that. Yeah, I think in terms of hottest market, I think it also goes back to where customers are and what their strategy is. But if you look at where the growth and the activity is, it's definitely Germany, for the reasons that I discussed before. Italy, with the Maxi tender, there was over, I think, 100 gigawatts of applications. So we're seeing lots of trends in terms of oversaturation and ambition in the market. But that is, yeah, to Lucy's point, is a lower capex market, but with a lot of potential in terms of the bankability of those contracted revenue streams. Ireland, in terms of the grid restructuring, the market reform, has potential. And then I think if you're looking sort of further out to other markets, back to sort of the derating, Poland, in the last capacity auction, a derating of 62%, had about 2.5 gigawatts awarded to BES only. I think those were on a T4, so they have a window to grow, to build those. So I think it depends on where the risk appetite is from the customers are. If you're looking at an example in Poland, is there going to be the potential to wait until those ancillary services and the balancing mechanism comes into place, then to deploy? So at the time of that delivery and build out, those revenues could be there. So I think it's tracking those fundamentals and then building that into your business case. I think Europe for us in Wärtsilä is a big focus for expansion. And I think it boils back down to our focus and strategy is really understanding what makes that market work, how we can deliver in it. I think to the point you mentioned about cybersecurity, Lucy, as well, great point. I think regulation is driving the market, but then there's regulation to enter the market. How do you get around those issues and barriers to actually enter a market? Everything from the product for certification to fire safety, which can be very regionalised. So it's a set of considerations across the board. But Europe is really our focus. Looking forward to doing more business there.
Yeah.
So
I actually remember that your global sales director told me that a couple of years ago, Europe gonna be bigger than US, and I was like, no. And then now I'm like, we're getting there. It's nearly there. So I'm on board on you.
Yeah.
So Markus.
Thanks. So I think many of the biggest markets in Europe were mentioned, but I want to offer you something different that can still excel in terms of hotness of the market. So in the Nordics, Finland and Sweden have in recent years offered one of the highest IRRs in any European markets, and I think they will continue to do so. They are not as deep markets as the previously mentioned ones, simply because of how big the countries and the infrastructures are, and you have to accept market risk in there instead of long-term contracted revenues, but the fundamentals definitely are there for high returns. Finland, in the last previous 2 years, had the highest number of days with negative electricity prices, offering instead of only reserve market revenues, already good arbitrage opportunities, I think, which will increase in the future. And I believe that even though there's fear of the market saturation that is caused by something that Max mentioned earlier, that people and entities reserve these grid connections, apply for them, and pipelines in different consultant forecasts start to look really high. But when you look at the hard facts from Fingrid's Finnish TSOs or Svenska Kraftnet's Swedish TSOs, open data portals on how many megawatts of energy storage is pre-qualified to enter, for example, the reserve markets, the numbers are still pretty low. In Finland, you might think that the pipeline is some gigas of projects, but still, if you look now from Fingrid's website, it's 84 megas of pre-qualified capacity that actually can enter in the market. And so I believe that those will continue to be interesting. Something as a last kind of idea, I think, is the Baltics. Their recent disconnection from Russian interconnected system and connection to Central European system has already had interesting effects on the daily pricing, and I believe that's something to look at, what will happen in there and what will be the need for local frequency regulation assets.
Next final word.
Yeah, I feel like everyone said all the markets already, so I'm just going to repeat them anyway. But I think, looking at today, the hottest markets I see are, Germany and Benelux, where there's both crazy trading opportunity today, but also a very liquid environment for revenue hedges and tolls. A combination of that, you obviously got Italy with the Maxi auction, very exciting revenue opportunities there.